FRK 311, non-current assets held for sale, video lecture number 2. Assets outside the measurement scope. Initial measurement where the asset is already carried at fair value. What do we mean by this? The asset was carried at fair value either in terms of investment property or in terms of something like financial instruments. So therefore our measurement will have to be the carrying amount will be the fair value at date of reclassification. So the measurement to fair value at the date of reclassification will be compared to the fair value at the beginning of the year, and the difference is then the adjustment to that asset. Then after you made the adjustment to the new fair value, then new carrying amount of the asset will be transferred from the non-current assets to the current assets. Rule number 2. This rule is not applicable in where assets are already carried at fair value. For example, investment properties and financial instruments. These assets, although they are now carried in terms of IFRS 5, they are still measured in terms of the applicable standard after they are classified as held for sale. So the measurement at fair value in terms of IAS 40 or IAS 39 and not at the lower of carrying amount and fair value less cost to sell as we did previously with IFRS 5. So be sure that you understand this difference. We measure it at fair value in terms of the relevant or applicable standard. Subsequent measurement. At year end, when we have the statement of financial position date, between the date of classification and the date of the actual sale, then because the non-current asset is already carried at fair value at that date, the investment property or financial instruments will be applicable. The remeasurement will then be in terms of the rules of those two standards and not the rules of IFRS 5. Therefore, summarize, the measurement rules of IFRS 5 are not applicable to assets previously carried at fair value, but the classification and presentation, in other words disclosure, rules of IFRS 5 are still applicable in this case. Non-current assets acquired with a specific view of disposal. Please make sure that you do not confuse this with inventories which are sold as the business goes on. In this case, you purchased a certain item of plant or equipment or one of the others, and you now want to sell it within the near future. You can only classify it as held for sale at acquisition date if the 1 year requirement is met or the extended period as we discussed previously, and all the other classification criteria are met. Now, if at that date of purchase the other criteria are not yet met, you are still allowed to classify this as a held for sale acquisition at date of acquisition, but only if it is highly probable that the other criteria will be met within 3 months of the acquisition. So for initial measurement, we will carry this asset either at cost or fair value less cost to sell. Remember, you would want to purchase it at basically the fair value, but once you measure it at fair value less cost to sell, then this can result in an impairment loss at initial recognition. So be aware of this fact. If you purchase an asset, if an asset is classified and complies to the criteria to be held as a non-current asset held for sale, then you must, if this asset is classified as a non-current asset held for sale after statement of financial position date, but before the financial statements were authorized for issue, then no classification as held for sale. It only belongs to the next financial year. But because of the fact that you know about this, you must disclose the following in your financial statements. Firstly, the description of that non-current asset, the facts and circumstances of the sale, the expected manner and timing of that sale, and then the segment to which the non-current asset belongs. Impairment losses, this is for self-study. You already know and have studied impairment losses. And then finally, gain or losses on the sale of this non-current asset held for sale. Once the asset is now sold to a third party, the proceeds less the previous carrying amount will be a profit or loss that will be recognized in the statement of profit or loss, or SPLOKI as we also say. Please look in this regard to example 2817 for self-study.